A very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The market's in fine fettle. Days high is what the benchmarks are trading at, but broader markets are also active. Out of the large cap, obviously the mining shares are the ones leading from the front today. Both Coal India, Vedanta, 5% gains coming in over there, followed by some of the financials right now. But it's the broader market which are also gaining, and we'll get you all the action, but after the top headlines as far as on the COVID corner is concerned. Well, global cases are crossing 84 lakh people, and out of them 4.5 lakh people have actually died globally. Cases in India are crossing 3.6 lakhs, and 12,000 people have died in the last 2.5 months as far as India is concerned. India's recovery rate has improved to 53% almost. That's a good news coming in. Meanwhile, Fitch has lowered India's growth to negative, growth outlook to negative, and that is obviously because of the COVID impact. Public sector banks disbursed 18,000 crore under the ECGLS scheme. That's the commentary coming in from Finance Minister. Tarun Sisodia will take charge of Delhi's health ministry. Remember, Delhi after Bombay is one of the worst hit as far as COVID impact is concerned. Meanwhile, Maharashtra government caps walk-in labs test at 2,500 rupees. So anybody can go into a lab and get themselves tested for 2,500 rupees. China, meanwhile, has reported 28 new virus cases. Remember, this is after they had claimed that no new cases are being found. This appears to be a smaller second wave. And use of dexamethasone under medical supervision only. That's the word coming in from WHO. And Trump has tweeted that there are no plans to reimpose lockdown as far as the US economy is concerned. Well, let's take the discussion forward. Market, of course, are doing their own thing, but today we thought of getting you a perspective from a veteran investment banker on what is making the market so receptive and so active and buoyant as far as big fundraisers are concerned, big PE deals are concerned, big blocks are being absorbed very nicely. In fact, are getting oversubscribed. Deals like Reliance Industries ones are happening one after the other. S. Ramesh, MD and CEO of Kotak Investment Banking, is here with us today. One of the leaders as far as investment banking divisions are concerned, or sectors space is concerned. Ramesh, good afternoon. Thank you very much for your time today. First of all, let me congratulate Kotak Investment Banking for being one of the lead, topping the lead tables as far as your space is concerned. It's a very competitive one, but you've managed to outperform the space very nicely. First of all, in the last 3 months alone, billion-dollar blocks are being oversubscribed. Big deals are happening, fundraisers, QIPs, and then we are also at one section of the market complains of being a bear market. What exactly is happening in your side of the business?
Good afternoon, Ajay. The year 2020, as regards to fundraising and sell downs, is living up to its name of being a 2020. There are large sixes being hit, and they are also being hit very fast. So if you look at April-June quarter, we saw a record fundraising of 105,000 crore through rights, QIPs, blocks, and this must be the largest for a long time. And to put this in perspective, the whole of last fiscal, which is fiscal 20, we did 150,000 crore fundraise. Now, to put another perspective to this, most of these fundraisers and sell downs have happened in large blocks, and you would have noticed IPOs have been rightfully absent for now. They say that necessity is the mother of invention, right? So I want to point out that such a large volume of fundraise in the large caps we have done in a COVID environment where I have not stepped out of my home. Other colleagues Clients have not stepped out. We have not met each other. And most of this all of this fundraising has happened through technological and online, innovation. We would have never thought about it a year back. Just sort of putting this in context, we expect this trend to broadly continue, but in a more volatile market. That's our judgment. In our young childhood, a lot of us would have played snakes and ladder. So I do expect a snake and ladder, a SAP CD market, and we have to soft land the fundraising in that kind of environment. Now, what's really happening on the corporate side? So if I digress a little to India Inc., India corporates, what we see is that almost all corporates are in some form planning for a fundraise. And the elephant in the room in that context is leverage. So either it's a promoter leverage or it's a leverage in the balance sheet of corporates. And they are taking this matter very seriously now. So they have to deleverage through equity raising. And if we also look at the banks and NBFCs, they are, in addition to the deleverage story, they are also looking at raising confidence capital or survival capital. And a very small population of strong corporates are also seeing this COVID-led opportunity as an opportunity to make acquisitions. So all in all, what we are sort of sensing in the environment is there are massive plans for corporate raise. Large proportion of India Inc. is getting ready. And my judgment is that not all of them may cross the line. Another new trend that we are seeing in this fundraise and also looking at the pipeline is rights issuances are back. So in fact, in addition to the largest rights issue that was ever done by Reliance Industries, there are at least 3 or 4 large groups, large companies which have announced rights issuances. You may recollect that in Jan of 2020, SEBI had announced some guidelines for fast-tracking rights issuances. So those guidelines have helped. And additionally, with subdued valuations, most of the companies and the promoters feel it may be better to do a rights than to dilute. At this juncture, I'll just take a second to say that in this environment of fundraising plans and discussions that are on, I think we must not underemphasize the role of regulator, particularly SEBI. I think they have been listening to the industry association voices. They have not been lagging behind in looking at what changes needed to be made to facilitate the fundraising environment. And the FIG sector, the large groups, pharma, consumption, telecom, these are some of the sectors we are seeing, investor receptiveness to look at either blocks or fundraising. And when it comes to investors, it's a no-brainer. It's a buyer's market. So there's a bit of price sensitivity. And mutual funds, the local mutual funds are particularly becoming relevant. We see them participating in quite a wholesome manner in most of the action that so far happened. So this is a quick synopsis of how we look at the fundraising environment.
Right. Ramesh, there has been record fundraisers, but the bulk of them actually have been in the financial services, banks, NBFCs. Many of them are still under the process of doing so, shoring up the balance sheet, preparing for what lies ahead perhaps, and comfort capital, as you just said. Even Arundhati Bhattacharya I was speaking with earlier was recalling the same trend to actually pan out. What I want to understand is your conversations with some of the clients. What feedback are you getting? How are clients choosing between A versus B? What kind of preferences, what kind of companies are they tilting towards in favor of, and which ones are they shunning or ignoring?
So if you look at before this COVID environment, a little before, maybe the start of this calendar year, and if you look at the past years, it's been dominated by the FIG sector. So even in this sell down, we have seen the FIG sector having a major role. But one trend that I am seeing a change is that we are noticing rights issuances and block trades happening in the non-financial sector. So that's the first thing we must keep at the back of our mind. Second is there has been perceived concerns around the lending NBFCs, some of the banks, So just now when we look at it from the investor lens, and as I mentioned before, it's a buyer's market. I think FIG is not the real hotspot just now. So it's more selectivism in the FIG sector, but it's more the larger groups, the stronger companies in infra, some of the companies which are parts of the larger groups like the Tatas, Birlas, Mahindra. So that's where I think we are seeing investors understanding and recognizing that angle for recapitalization. Some of the smaller, well-run banks and NBFCs will of course get capital, but it is not a granted thing that this will be dominated by FIG. I think the manufacturing and the non-FIG sector will see a reasonable large proportion of fundraise and sell downs in the next 12 months.
How important are valuations in this, among all the themes that you are observing? Are promoters, in your talks with some of these promoters, are they comfortable right now to shore up the balance sheet nicely, become much more comfortable in the environment rather than be very choosy about nickel and dime? So what kind of feedback are you gathering from the promoter community regarding fundraising?
If I look at the time between April, May, and a little bit of June, not right up to date, but a few days before, I think Nifty had lost at one stage about 18-20% of its value. But if you look at some of the companies, particularly in the FIG sector and some outside the FIG sector, I think they had lost value significantly higher than this 18 to 20%. So we saw two groups of companies or players. So some of the corporates which had lost a little more than this Nifty, but not too much more, were clear that, look, if they have to raise capital, QIP is efficient, and they just went in and did the offering. And as you said, we saw a lot of practicality. They recognized that the stock price is the final practical barometer and raised money. But there have also been some cases where the valuation drop as compared to the fair value has been much higher than this 18 to 20%. And there, what I mentioned earlier stands out. These companies or groups are looking at rights offering. And therefore, whether it's a rights or whether it's a sell down or a QIP, finally, it doesn't matter. I think we see corporates, promoters being practical wherever they can get the money from the investors to go ahead and finish their funding plan. And if I may just take a minute more on valuations, it is a buyer's market. But if I may just give you a short story out of some of the sell downs we witnessed and we did. So it starts with a little bit, if you take block trades, it starts with a little bit of a discount. But if the demand for the block trade or the sell down builds well, the discount really tends to narrow and you come closer to the market price. So finally, it's a trade between buyer and seller. And if the demand is good, I think there is reasonably good price optimization. That's what we have seen in some of the recent sell downs.
Very quickly, Ramesh, good year for you. What to watch out for in terms of key theme for the new year? Do you expect to take out the levels which you have already recorded for the firm, or the big theme that you're watching out for?
Step back, I'm talking on behalf of me and my colleagues at Kotak Investment Bank. I think we are more glad than ever before that we are part of a large financial services group which is well capitalized. We have always believed in the full service model, and therefore there is fundraise, there is M&A, there is getting financial sponsors to invest, there's a little bit of restructuring. So the firm is gearing itself to be available to corporates for a full service advice rather than a product model. And in times like this, you may be surprised to know that sometimes a corporate engages on a dialogue with us, defining a problem in a certain way. But finally, the solution for that may not necessarily be only fundraising, it may be something else. So I think we continue to be actively engaged. We do think that the advisory business, which comprises of M&A and private capital, will see a reasonable surge. We've had a good year last year. We closed about 14 deals. And I think that part of the business will kick off. We are engaged in corporate conversations. We're just waiting for some part of this COVID environment to stabilize a little, where after which we do think that some of those conversations will gather steam. we see the renewed interest in minority foreign capital. But just now, majority deals from foreign overseas corporates has taken a little bit of a slowdown. We'll have to wait and see when that momentum picks up. But overall, I remain optimistic that for the investment banking industry as a whole and for our firm, if we do the right things, I think there is a lot of engagements to be done with corporates and investors.
All right, Ramesh, we'll let you go on that one. Thanks very much for your time taking us through the trends you're watching in the mega fundraising which corporate India is indulging in, and you yourself as a firm doing very well participating in that. Thanks very much and best wishes for the coming year as well.